Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, August 17th, 4:51 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's version of the Revere Market Insight video. Some changes and not changes for the good to discuss in tonight's video. Let's get right to it. State of the market. We're still showing uptrend because the indexes relative to their moving averages still look okay. For a while, we've been talking about the fly in the ointment that has been small cap stocks and their inability to get any sustained momentum above the 21 and the 50-day moving averages. Mid caps failed today, and small caps also had a rough day. But we're adding to that the notation that leaders are starting to regress. Check over here on the trend gauge. You can see we've downgraded market leaders from bullish / uptrend to neutral. And this is just based on the feedback that we're getting from new buys, from lack of progress on the accounts in-house, some breaking of 21 and or 50-day moving averages, failed to follow through on strength. These are signs that it's time to take a step back. Our stops got hit. We've raised quite a bit of cash over the last couple of days as those stops got hit, and just time to take the foot off the gas. As you know, we have stops in place for everything that we own, and when they start getting triggered, as I mentioned, that's the feedback that you need for the market. That's the market telling you, hey, these things aren't working right now. We even diversified into a couple of other industrial type stocks, and those hadn't made any progress either and got stopped on a couple of those. So all in all, that is leading us to take the foot off the gas. Very obvious when you take a look at some of the charts that I'm about to look what's going on. So we are still showing a bullish or uptrend because the indexes, the 5 indexes that we review in every video, are still, for the most part, with the exception of small caps and joined today by mid caps, they're above the short-term 21-day, the medium-term 50-day, and the long-term 200-day moving average. These are primarily the trend is up on the large cap S&P 500, Dow, and Nasdaq 100, but Nasdaq 100 has been lagging over the last week and a half. And again, we'll take a look at the charts shortly. So as I mentioned, what just happened, leadership regressing. That's reflected in the indexes today. The only strength today in the indexes was in healthcare. Healthcare up 1.2%. Staples and utilities also positive, along with real estate. But certainly that's a defensive move in the market. So S&P 500 down 0.7%, Nasdaq 100 down 0.9%, Dow Jones down 0.8, mid and small caps down 1.2. So let's dive into this a little bit more deeply. But first, let's take a look at the team here at Revere. If you're interested in the approach that we always talk about in our videos about how we participate in market uptrends, when we sense weakness in the market, we get more defensive via a combination of hedging and or outright selling and locking in profits. Always have a stop in place for everything that we own. And what we find happens before the market takes big swoons down is we get out, we'll lose a certain percentage, and then we'll watch the market continue lower if the lack of health in the market continues. Right now, it's rotation out of growth leaders and into really into healthcare, staples, and utilities. We were rotating into some cyclicals last week, but those took it on the chin over the last couple of days. So always rotating, and we will take our cues from the leaders as well as the cues from where the major indexes are relative to their moving averages. And if you're interested in this approach, by all means, reach out to any of us. This is Dan over here. He's the president. He's a CFA, one of the most knowledgeable financial people I've ever met. reach out to him if you have any questions, Dan at revereasset.com. I manage the portfolios with input from Hunter and Alex. If you have any questions about the portfolios, you can email any of us, Hunter, Alex, or Don at revereasset.com. Mural's our office manager, does a fantastic job bringing new people on board, and Tim is our short-term signal specialist. You can reach Mural at Revere Asset or Tim at revereasset.com. So let's first take a look at one secondary indicator. The put-call ratio is reflecting some fear in the market as it spent the entire day in the 0.9s. That's on the extended side, so it's not like there's a lack of fear in the market. There's not a bunch of complacency. Here's the fear and greed index. This took a big tick down from I think 47 to 37. Actually, yesterday it was 49 down to 37. So the market's recognizing what's going on, and you want to reflect that fear. But if you get too fearful, that's a contrary strength indicator. So let's get, first of all, we'll break down the indexes, and then I want to point out something on some relative strength. So here's the S&P 500. We actually where we gapped down this morning between 6.6% to 1% across all the indexes, and we pretty much closed wherever we opened on these indexes. For the S&P 500, we did on the plus side see a bounce off the 21-day moving average as healthcare, as I mentioned, really held the day today. Money coming out of industrials, out of basic materials, out of banks, out of energy, and out of technology, and definitely out of XLY, consumer discretionary, as Amazon lagged and Home Depot had a negative reaction to their earnings report, down over 4%. So for now, it's a rotation taking place. You can see how we've been supported at a combination of the red line, that's the 50-day, the green line, that's the 21-day, going all the way back to the COVID recovery. So while this is a nice uptrend, you can see some serious bouts of pullback going on in here, and that's what we're trying to stay on top of. Right now, as always, the key on the big cap averages is going to be how we're reacting relative to the 21-day moving average, and then also how are the leading stocks acting. And based on my comments later, I think you know what we're feeling there. Here's the Nasdaq 100. It was a leader here, as you can see from this bottom. Actually, the big bottom was 519 on this. We were in a correction. We gapped down. We closed at the top of the range, then went on a nice run. We had a pullback here back in the middle of July, recovered from there, and really have just gone sideways since then. Now today, for the first time, we undercut but closed right on or right above the 21-day moving average. But if you'll note, after hours, we're down about 0.2%. So that would actually bring us below the 21-day moving average. We have a close eye on this. I mentioned last week that was really last week's lows were something we really wanted to focus on, and we're closing right there. Let's see what happens overnight and into tomorrow's action. Dow Jones Industrial Average broke out above this 35.1, 35.2 level, made 4 days of higher highs, pulled back today, bounced off the 21. So this is looking fine so far. It bounced right where it should have at this. The low of today was 35.120. That's right where it should bounce. If it breaks back below there, then we've got a failed breakout on the Dow Jones Industrial Average, and we'll see where it goes there. Note the outperformance for over the past 2 weeks. We outperformed here, now flagging that a little bit. Let's go to mid caps, MDY. We talked about how we were glad to see the mid caps for a little over 2 weeks above the 21 and the 50-day moving average, and we're hoping that small caps would join them. But unfortunately, mid caps broke below the 21 today, closed right on the 50-day moving average. Again, we really like to see 2 closes for some confirmation of a breakdown, but look at the lack of relative strength over the last week and a half in mid caps, and now small caps breaking down even further. They did bounce at the 200-day moving average today, but this time that they spent above the 21-day. Like I said, we like to see two closes for confirmation. You got your confirmation there, and then the 21-day has also rolled over. Now, let's take a look at, I want to point out, here's the Nasdaq 100. Note its relative strength peaked on 8485. This was when our in-house accounts made their recovery highs from the growth sell-off, and ever since then we've seen some deterioration, culminating with 2 down days and 2 days of underperformance of growth stocks and a bunch of our stops getting hit. We can also confirm this by taking a look at the growth proxies that we use. Here's IWO. This is the small cap growth that peaked on 8.5, has shown no strength at all over the last week and a half. Let's also take a look at ARKK. This is the Cathie Wood ETF. This peaked also on 8.5. So we're getting confirmation that what we're seeing in our ownership is also being reflected in the indexes that track growth leaders. Here's another one we track, PDP. When did that peak? 8.5, a little bit of follow through on 8.9, but look where it's gone over the last week and a couple of days. Let's go to FFTY. This is the IBD 50 index. Again, it peaked on 8.5, just like the accounts in-house and really growth stocks did for the most part. One day yesterday, weakness, but today really confirming that weakness. Now, there have been some new breakouts that are acting okay, but some of the leaders off the bottom just stopped making progress. We're going to look at those charts in a little bit and take a look at why we've been stopped on some of them, and either stopped fully or stopped partially. So what do we got now? We've got Nasdaq 100 not acting well. Oh, one more I want to take a look at that we track, QQQJ. Same information, same situation, relative strength. Peaked here on 8.5 and has been going down since then. So it's very clear what has been going on. A lot of growth. We had mild underperformance last week versus the S&P 500, as really we just kind of went sideways and let the moving averages catch up to some of the growth leaders. But now some of them just flat breaking down, and a bunch of stops got hit today. First, let's talk about some of the things that we rotated into that we were looking for safety that we got stopped out on, and these are mostly industrials. Generac along this 21-day moving average, but gave it up over the last 2 days, and then a big break of the 50-day moving average today. So we got stopped out on this. And again, we are keeping our losses to less than 0.2% so 0.2% on the overall portfolio. We size these based on where our stop is, and we don't want that stop to be more than 0.2%. From where we enter. So stopped out on there. Another one, a steel stock. We had a big move up and booked some profits in STLD. And when that it continued to go higher, it's actually below where we sold it now, as all the steel stocks have pulled back over the last couple of days. You can see the SLX had given it up. We rotated into CLF. I pulled the plug on this today when we were showing the broad weakness in the steel stocks. We didn't get to the max loss on this. Also, Tesla, this was sold yesterday as it broke down from this, and this is a failed breakout, plain and simple. Let's take a look at this on a 15-minute chart. You try to break out here early on Friday. That breakout failed. From failed moves come fast moves. Over the weekend, it came out that the government's taken a look at probing some of their crashes related to their autopilot. Market did not react nicely to that. Gap down, follow through to the downside, and really it broke this tight range that it had been trading in. Closed below the 21, closed near the top of the range today, but that's cold comfort for somebody trying to hold it. But anyway, we ditched it on Monday. Snapchat, here's another one that we had really felt good about this with this gap up on earnings, went sideways, bounced at the 8 right where it should have, but again, failed breakout above the range. From failed moves come fast moves. We took half off here. We took the rest of it off Monday when it broke below the lows of this consolidation that it was putting in. And this is kind of what you've been seeing. You get some nice moves. They go sideways. They try to break out. They get sold. And then the action that you see in Snap over the last couple of days is very typical of what we're kind of seeing in some growth stocks. Lululemon's another one we got stopped out on today. I mean, this is just a flat change in character. You can see how Lulu was following the 8 and the 21 higher, rolled over 2 days where it paused and the 8 started to roll over, and then the gap down today on with volume, change in character. Lulu, we booked between 8 and 10% profits on the different pieces of Lulu that we had. Here's another one that we sold, Square. Took half of this off on Monday. And this is another one that just looked really good. Earnings, great move up, 2 days of consolidation, followed up with another move up to the top of the range, pulling back nicely, no big deal, and then just runs out of strength. Not heavy selling. Look at the volume on this, but the price action isn't what you need it to be. Took half off when it broke below the 21 Monday, still holding some of this, but we're just about break even or down a couple of percent on this and very close to our stop. The other one that we took a piece off on is Net, same situation, just not making any progress anymore. Failed breakout. Actually, if you want to look at this, we tried to move out here on the 9th and the 10th, pulled back, held the 21, that's fine. Held the 21 each of the last 4 days. It needs to really continue to hold the 21, but we're right on the edge here. You pound on the 21 enough times, you break below it. We still got like over 20% profits in the piece of this as we've been in it for a while. But when you start failing to make progress, you can either stare at it and lose your money, or you can take action. Let's see what else. ZI. Was really nice for a while. When it broke the 8, I didn't want to give it all the way down much further. We sold this around 59. It's actually back at 60. It's above where we sold it, but again, not making any progress on this. And granted, this thing has been hit with 2 secondaries, so there's been headwinds in that, but we're at a ZI also. I talked about Lulu getting stopped on that. Generac. I did add a little bit to Apple today. Apple, this just looks like it really wants to go, but the market's holding it back. Big volume yesterday as it tried to break out. Didn't give up that breakout, just kind of consolidated sideways yesterday. But this is another one that's riding the 21 higher, showing relative strength over the last week. So showing relative strength like this is different from what we're seeing on some of these more high momentum growth leaders. So added to Apple. Stopped out on LC today. This is another one that was had a big gap up on earnings, continued to act well. Break below the 8 is a change in character. When it broke the 8, we still had another 10% down to the 21. I didn't want to take a chance of giving it that, so we booked our high teens, low 20s gain on LC. Also got stopped on CAT, as this just showed some promise, but this is really what industrials have done. 4 straight down days sitting on the 21 and the 50, but took a small loss on that, and added to put a hedge on the Qs, and I'll show you using SQQQ, and I'll show you where on this 10-minute chart here. So yesterday's lows, 363.70. We tapped on it here, broke below it, reclaimed it, broke back below it again. When we broke back below it the second time, this is where I put this on. We did rally into the close, so I'm slightly underwater on this, but what I'm really looking for is to add to this if we fail at this 21-day moving average, and add more to it and probably cover down at the 50-day moving average. But that remains to be seen what's going to happen. But for now, you can see the Nasdaq 100 peaked on the 5th, just like growth stocks in our accounts in-house, and they've been trending lower since then. So with all the stops that got hit, we've got less than 3% to the downside, including the hedge before everything that we own would get taken out or fully hedged. And that's really what we're watching is what's left in the accounts, and let's go through them. Let's go through what we still own. FAS, financials, even you saw the strength here, pulled back, still holding the 8 EMA. Lack of relative strength, though, over the last couple of days on financials. We still own net, still own a half size in net, and that looks fine. This was really, you could argue, the biggest consistent leader after it broke out back down here, got its pivot plus 20, 25%, acted well, behaved well, just like a leader should. If that continues, we might take another look at it. But also Denbury, we're on the edge of getting completely stopped out on this also, but still holding that. NVIDIA has earnings tomorrow, sitting right on the 50-day moving average. We still have a half size on that, still have half size on Square as it hangs right around the 21. Datadog, still the best acting and is really holding up pretty well here, but if it breaks below yesterday's low, we'll for the most part be out of this. Dexcom, as medical stocks are acting well, this one continues to act well too. We're profitable in this one now. It was bought a little over 500. And AMD also holding up very well, but the weight of the market may pull these things down. Never know for sure. For now, it's holding up and hasn't gotten our stop triggered on it. We also still own UPST, which is acting well and is really one of the big leaders. But it can happen to these big leaders if too many sellers come in and decide to take their profits. So that's going to wrap it. As always, like to hear from you. I'm on Twitter at @DVandenbord, email don@revereasset.com, phone 855-REAL-WEALTH. To summarize, leadership regressing, problems with the leaders, no traction from small caps. Mid caps broke below key moving averages today. The big caps are holding up along the 21. If the 21 gives way, I don't want to be holding too much because it could slide quickly down to the 50-day moving average on the indexes, and that's another 2.5% down on the S&P, and on the Qs, that's another 2.3% down. So that'll be something we'll be keeping our eye on for the rest of the week. Thanks for listening, everybody, and have a great day.